Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, guys, well, it was a bit of a nothing burger day. We were supposed to get some trade deal announcements as countries were supposed to bring their best offers to the table for the Trump administration in terms of the tariff negotiations today, but we really didn't get much in terms of that news whatsoever. One piece of news that we did get was that the labor market seems to be showing some initial signs of weakness. We got an ADP employment change here that was only 37,000 jobs added to the private sector. That's in comparison with the consensus, which was standing above 100,000. Now, that did a few key things. It did bring yields down, as it does put a point in the favor of being able to drop rates, as Jerome Powell has been very clear on the balance of risks. On one side, you have inflation, which for now is seeming to be going to the downside. But on the other side, the balance of risks is also to the labor market. And several people, analysts, and the Federal Reserve members alike do deem that the risks to the labor market now significantly outweigh the risks to inflation, at least in the medium term. So this was one piece of news that also led to some choice words from the Trump administration this morning, with President Trump saying that Powell is too late once again and that he must lower interest rates after a weak ADP jobs report, referencing the fact that Europe has already lowered the interest rates 9 times, and that the United States is currently one of the countries in the world with the highest remaining interest rates after the bout of inflation that everybody has battled worldwide over the past 3 years. So this is going to be an ongoing story. In my opinion, one piece of news like this is not going to be enough for the Fed to move. You guys know it best. The Fed likes to see trends, and trends meaning 2-3 months of data front to back before they actually start accelerating the rate cut path to the downside. But today we did see yields come down off of that news, as this time bad news was indeed good news for the rate cut narrative. So in today's video, guys, we're going to take a look at a few things together. No earnings for today. That'll be tomorrow when we cover Broadcom. It's going to be the biggest one of the day. Potentially, I'll also do Lululemon. So no earnings today. We're just going to get right into some charts, right? Going to just go over the major technical analysis of our major market indexes, see how everything's shaping up, which sectors are leading, which sectors are lagging, and within the sectors, which names are leading and lagging to potentially set us up for some nice trades. Thereafter, take a look at some of our big tech names. All of this big tech list, same analysis, right? Which ones are leading, which ones are lagging, which ones could be the best trade opportunities. And lastly, we're going to go through the options list right here and go over some of the biggest gainers and some of the biggest losers of the day. So today, since we don't have any earnings or any macro catalysts to recap truly, I'll be trying to spend the most amount of time on the charts possible, trying to identify the best possible swing trades and maybe long-term positions for everybody who watches these videos. So it should be a very fun and possibly shorter video than usual. Let's jump right into the action, shall we? So the SPY down about 0.03. The QQQs, however, continue to lead the market up 0.28, and both of these indexes are very close to their all-time highs. The SPY right now up 1.1% year to date, and the QQQs up almost 3% year to date, largely erasing all of the damage that started from the tariffs on the infamous Friday the 21st of February, the day after we got the Walmart earnings that showed some weakened guidance in terms of the consumer, and the day of the first Michigan Consumer Sentiment Report that sent the market in a tailspin, a legendary tailspin, mind you. And now we continue to embark on this most hated rally. The decline was one of the most hated declines of all time because of the implications that it had worldwide. And now this rally recovery leaves some people in absolute disbelief. So it's really been hated pretty much all year. But where do we stand? Well, we stand at the exact same place right now that we were just 4 or 5 months ago at this current time. So moving on to the heat map here, you'll see that even better to where big tech was once again the outperformers today. Meta, special shout out to them, up over 3. Tesla was down over 3. All other than that, the biggest component in terms of the leading segments was semiconductors once again, as we move into those AVGO earnings tomorrow. Financials, bit of a drag on the market. Healthcare, also a bit of a mixed bag. Defensives had a rotation down, and the bottom half of the market, surprisingly too, had a bit of a rotation down, and that is in spite of yields coming down on the day. Moving into the one-day relative performance, you can see that even better to where communication services led to the upside by Meta was one of your better performers. To the downside, we had utilities and energy, of course. On the 1 week relative, where do we stand? We still stand at a very relatively broad market overall. Tech has been leading the pack, as we've been seeing in our videos most recently, led second by basic materials, and healthcare third. On the 1 month relative performance, well, it's been a very broad market rally recovery, of course. Tech, consumer cyclical, and communication services have been been leading the pack there, and healthcare still lagging behind. Still one of my favorite sectors to position in, as I've shown you guys just the other day that I started a leap call contract on the sector just because it's been lagging the market so hard. So let's now just jump into some charts right now, guys. We're going to go through the index rundown. So I want to focus on which sectors are leading and which sectors are lagging behind. And within those sectors, what could be some potential plays that I'm looking most closely at. So we're going to start off with the SPY, of course. The daily uptrend is categorically maintained at this point. Beautiful daily uptrend, sideways consolidation into some form of a bull flag, and a new daily uptrend has resumed right now, coming into resistance, pretty much 600, let's call it, up to about 610. In the event we get rejected in this resistance range, the bulls have created some nice space off of our support lows. Anything above 584, we'll just be looking for a higher low, maybe for a second or possibly third attempt at trying to crack through this resistance range, but everything not looking too bad. The market was not as broad today as it was in other days, but still I don't see any red flags, and you can also see that on the weekly timeframes to now where we're just starting to break out here over and above, trying to attack the resistance range. The weekly higher lows still stay put roughly at about 574. So the bulls still have a lot of space in the event that consolidation is needed before more momentum accelerates to the upside. So not looking too bad. Moving on to technology here, QQQs has been one of your leading sectors recently. You can see that by the fact that they're already attacking their resistance highs. 535 down to about 525 is going to be that resistance range, and we do have a very nice daily uptrend moving into it. So in the event we get rejected a bit here and move to the downside, still a lot of space for the bulls to work with here. Anything above 512, just looking for a higher low for possible further trend continuation. That is if they don't just blast through it right away and give us the infamous breakout and then maybe retest the range trade. That will be an interesting criteria that I may be paying attention to myself. On the weekly timeframes, it is very clear as well, looking for the weekly trend expansion at this current time. Your higher lows are now set right around about that 507 mark. So even if we do choose to consolidate a little bit, no problem at all, guys. Still just looking for some higher lows at this point for some further trend continuation. Momentum is definitely in the bulls camp at the current time. Moving on to financials. So financials has been one that's been struggling with its resistance range, as you can clearly see in the past couple of weeks. Financials still not in a daily uptrend right now. They're still struggling with the equal highs of the past roughly 5, 6, 7 trading days, and still getting rejected at resistance right now, 51.55 to 50.79. That being said, the higher lows are clearly set right down here, 50.3. So we are still in a daily uptrend and maybe looking for the breakout, retest, and possibly run. But in the event that you break down and lose a bit of structure here, well, have no fear, guys. The bulls have a lot of space, right? It is a very nice weekly uptrend inside trading range right here, no new highs. So you would still just be technically looking for a weekly higher low with tons of space for the bulls, anything above 45.21. Probably my favorite company in financials right now. It's not directly a bank, nor is it a credit company, but it is a very solid company nevertheless, is Berkshire. Coming down into here, 480 down to about 470 is the sweet spot for me. That would be the 50 weekly EMA, and you can see how many times Berkshire has tested the 50 EMA in its company's history. Normally when it comes down into there, it's a good buying criteria. With the time frame that makes the most sense for me is definitely the monthlies. Yeah, we're just looking for a monthly breakout retest of the 12 EMA on the monthly and possibly run. Very nice consolidation phase for Berkshire right now, and I would not mind placing some swing trades down here, and if you have a big account, even selling some short puts could be a very juicy proposition. Probably in or above my favorite name, and couple that with Moody's. Moody's as well is looking very hot right now for a possible breakout of its all-time high range. SPGI is currently a little bit in that same pattern formation right now, looking for a higher low, looking for the breakout. So those are just three companies that I'm looking for. They're not banks, they're not some of the credit cards, but they are some companies, in my opinion, that still represent good value and have good technical patterns for some breakout swings. On to healthcare right now, the sector that just seems to be lagging behind tremendously behind the SPY right now. Daily uptrend is now in motion on the XLV, so looking very good here. Anything above 130.8, going to be looking for a daily higher low for possible further trend expansion. We are still somewhat trapped in this very tight range of accumulation, which some people would argue is a bear flag to the downside. However, if the markets keep pushing higher, I don't think healthcare will be left behind, all things considered. So that is why my bias does lean bullish right now. In terms of the weekly, you can see there's still a lot of work for the bulls to do. To put it in nice little bounce, get the weekly trend change, and then start moving on and start reversing some of this monthly downtrending action. Good thing for the bulls, though, they have a very, very large crew of dip buyers and support buyers down there, roughly between 130 down to about 121. XLV is probably my favorite sector to play as a whole. If I'm looking to play an ETF for some expansion, I do like XLV, and you guys know that I do have a leap call position right now, 130 strike for January 2027. So curious to see how that one evolves. Some specific names that are not UNH could be considered to be TMO, looking very good at the bottom end of the range down here. Not too bad. Very solid company. Hasn't done anything in 5 years. Merck as well at the bottom end of their support range, coming down into levels we have not seen since 2020. Massive sell-off, monthly oversold conditions on the RSI as well. All things leading me to believe that it might be a decent swing trade. And for something a bit more conservative, in the more value-oriented side of healthcare, it is a healthcare name nevertheless. I would be interested in Johnson & Johnson if we do get continued weakness. Selling some puts below 150, not a bad proposition coming into also 5 years worth of support, guys. So those are just a few of the healthcare names that I'm looking for. My favorite name for growth in healthcare right now has to be ISRG, guys. Phenomenal company, tremendous moat, tremendous competitive advantage too, and the fundamentals are not too rich right now. Looking for the daily trend expansion. This is a weekly breakout retest. It kind of looks like a semiconductor, right? Breakout of this range of support, which now it's support, used to be resistance. We got the retest action, and you might be looking to go a little bit higher. This is one that I have in my long-term portfolio and is looking pretty good for a swing trade overall. So I figured I should bring you guys just a few of the names that I'm looking at currently on my own. Moving on to semiconductors right now, another sector that is leading the markets in terms of performance, looking very good. Daily upturn right now into the resistance range. Resistance range stays put at 260 all the way down to roughly 250, not looking too bad. Led to the upside today by Broadcom, not NVIDIA, but TSM was one of the plays that we were waiting to break out, and it finally has broken out right now. SMH looking very good for some follow-through continuation, and if we get rejected right here, a lot of space to the downside. Anything at this point above 235, looking for a daily higher low for possible a second attempt at breaking through. The weekly is also looking very good for the bulls. It was a sideways range of accumulation, bull flag, and now might just be getting the breakthrough overall. Now, if we're looking for plays that are possibly lagging behind in semiconductors right now, my favorite one of the pack definitely has to be ASML. ASML has not moved from these levels in roughly the last 6 to 9 months. I believe it's lagging behind the market. It's pretty hard right now. We covered their earnings. They had very good earnings overall, and the valuation does warrant some upside appreciation. TSM was another one, which we'll look at a bit later in the video. But shout out to Micron as well. Micron might be looking poised to start smashing through a bit of its resistance range right here, going for the breakout, retest, and possibly run. So pay special attention to Micron. We covered their earnings as well just a few months ago at this current stage in March of 2025. This is this earnings right there. And the valuation at about $70 was good. I haven't redone it at $100 right now, but I guess, I could do it live right now for you guys. It's still not that bad, right? They have about $7 in EPS. So if we're looking at $100 right now in terms of the valuation, forward price to earnings, 100 divided by 6.97 is your EPS. You're looking at 14.35. It's still one of the cheapest names, guys, in all of semiconductors right now. And they have a very strong EPS growth rate. They're still sitting at under a 0.5 peg. That is absolutely ridiculous for this company. Should be having some very good growth in the future. Moving on to the Russell now. Lastly, the Russell down about 0.28%. The Russell is also struggling with its own resistance range, 216 down to 207. So keep that in mind. Daily uptrend is nice. The bulls are looking to make some moves into that area. And on the weekly, guys, it's still been a weekly area of consolidation. We are just looking right now for the expansion of the possible bull flag. As I said, the upside target at this rate should be around 216 for the growth stocks. Growth stocks should be good, provided that the SPY and the QQQ continue going up, and provided that we don't get an erosion of any macro data in the near-term future. If we look at our minor sectors real quick, just going to cover these because today we have a bit more time. Let me just check the time right now. Yeah, we're good. XLP coming down. I've been very vocal on the fact that I like this one, but I like it down here, 81 down to roughly 79. Decent little area to be playing some support ranges for some short puts or maybe some swing trade longs. Into resistance, maybe not the best proposition. Utilities as well. I like utilities, but I like them a little bit lower. We are going for the weekly back test of the lower level, which would be 80 down to roughly 79. Looking very good for the breakout, retest, and possibly run on utilities, especially if yields start coming down. These start to be a little bit more attractive. And lastly, real estate. Well, real estate responded really well to the drop in yields today from that weaker than expected jobs report, and real estate is just looking for a possible breakout of this range right here. You don't need to think about REITs, but also one of the ones that I've been looking at, guys, is home builders. Now, I know what you're going to say. The housing market has been extremely weak recently. There's a lot of pressure on that market because of yields, and it is quickly turning into a buyer's market. So are the home builders actually going to be able to move forward with it? Well, the answer is going to be, well, if you have a long enough time frame, yes. And right now, home builders have been consolidating for roughly the last, 8-9 months in a row. They're currently hitting the bottom end of a 5-year trend line right now, looking pretty good, hitting some support areas in the higher 80 range all the way up to about 90. Not looking too bad. If we have a swing trade thesis right here, very simply right now, guys, the stop loss would have to go below the low of this week overall, and you'd be targeting this higher end of the range, 102 down to roughly 98. Decent risk to reward profile on this swing trade, but also for a longer term position, if your bet is on rates coming down overall and the consumer being able to regain its footing at least by sometime next year, you could be able to see some form of a slower than expected expansion into 2026. So it may not be the worst time to position for the home builders in the event it's a trade that you are closely watching or have been closely watching overall. Now, moving on to the VIX. The VIX is currently still doing nothing, so we're not going to spend too much time on that. We'll still be waiting. Any lack of news or any positive news will continue bringing us down on the VIX, but just pay special attention. Any erosion in macro data could send us flying right back up into the mid-20 range. I still think the VIX is quite manageable right now, but there's really nothing to report. We'll take this day by day. The dollar also has been categorically weak. This has been one of the reasons that equities have been able to rally a lot, but also one of the reasons that yields also have been a little bit high. So it's kind of a, it's a paradox right now in terms of the dollar. Some people like it, some people don't like it overall. That being said, we are still looking for the bulls to establish some lows and try to attack the higher end of the resistance range, 100 up to 102. However, if you crack these lows, guys, you may just be fulfilling the prophecy that I've left on this chart since this rally was kept in motion. Are we going to flush? Well, that depends, guys, how bullish people are on the dollar, how bullish people are investing in Trade America for the foreseeable future. And lastly, taking a look at the yields upon all that. So the yields are actually down, one of their best declines in a while, 2.27% to the downside. We can clearly see that the bears have established here a daily downtrend, not looking too bad. And on the weekly time frames as well, we are quickly pulling away from the 4.5 range on the 10s, and we're pulling away from the 5% range on the 20-year yields overall. Bad news was good news today for the yields overall, but we do want to see a sustained trend to the downside. But in my opinion, that only come when we get more clarity on the rate cutting path. And that clarity will probably come in about 2 weeks' time when we get the next Federal Reserve meeting. Several people are anticipating a rate cut. Some people might say it's only coming in July. We'll just have to see what Jerome Powell has in store for us overall. I still think bonds are a phenomenal buying opportunity right now. In around the lows on TLT, 86 down to 83 could be a very decent accumulation zone, but you're going to have to be patient for the bond trade because, as you well know, it does move very slow. Moving on to gold right now. Gold still respecting the pattern that we were watching yesterday. They are trying to go for the daily breakout right now, establishing some higher lows. In the event we come lower than this line that I established for the short-term swing trade, right? It's looking good right now. In the event they come down below, you just have to understand what the bulls are trying to do, right? Trying to establish some higher lows, may have to come down and tap into the 12 or 26 EMAs into the lower bound of support down here, 3,300. I would be looking to accumulate some gold position longs right now for a potential rally continuation on this asset, looking pretty good after what, 8-9 weeks of sideways accumulation, which can otherwise be viewed as just a massive bull flag right here, tightening range of accumulation. You might just be looking for the upside breakout. Gold is looking very good for that, in my humble opinion. And lastly, taking a look at Bitcoin right now. Bitcoin was actually down on the day by about 0.66, but we know what the bears are trying to do right now, right? They've tried to flush into the daily downtrend continuation. They're not getting it. Why? Because we're in a big area of support. This was previous resistance. It is now support 105 all the way down to 101,000. On the weekly time frame, it makes the most sense looking for a weekly higher low, possibly for further trend continuation overall. I think Bitcoin is a decent area to be positioning for some swing trade longs overall, but just pay attention, right? In the event that they consolidate, where could they possibly consolidate to if we lose this zone? I think here, all the way down to the 12 EMA, 98, 97,000, that just might be the range. Clipping in the more of the top end of these guys right there, that could be some of the ranges that you might want to establish before going for those longs. And the longs obviously will be looking for about 110, 115, 120, etc. That's everything everything for your overall market rundown. Now let's jump into some tech names, and after that, we're going to do a whole bunch more charts. So taking a look first here at Apple. Apple was once again weak on the day, down about 0.22%, but we know that Apple's just been range trading so far. Overhead resistance 210 all the way up to 222, and down below support 196 to 185. Quite simply, when we approach the bottom end of this support range, I do enjoy selling short puts in the lower 190s to high 180 range overall. Not looking too bad there, but overall it is just a directionless range right now, right? As you can see, a tightening range. The bias right now for Apple is long, just because it is, well, one of the biggest components in the SPY, and the SPY has been trending upwards. So we know that Apple, it might just be a matter of time before it starts recapturing the levels. It's been caught in several tariff headlines, especially the ones in relation to China, but we know also that the growth rate of Apple is slightly slow. The refresh cycle of their iPhones is also slightly slower than anticipated, and they've been struggling with their AI rollout. All of these things we know so far. So to be sure that we're getting the best price on Apple, maybe the best thing is to be more patient and wait for it to come down into support, or just sell short puts under the market. On to AMD right now. AMD expanding well, part of that semiconductor trade. Beautiful daily uptrend, attacking the overhead resistance soon. 120 up to 132, looking pretty good right now for some follow through. And even if we do fall back a little bit here, anything at this point above 109 is just going to be looking for a daily higher low for possible further trend continuation. Looking pretty good. The clearest time frame, in my opinion, is the weekly right here, where we had some sideways consolidation, accumulation of a bull flag, and now might just be looking to push the levels a little bit higher. AMD, still one of my favored trades in terms of semiconductors because of the valuation. The valuation is still incredibly cheap for the amount of growth that this company will be having in the next few years. So keep all that in mind. If we do fall back a little bit, you will probably see me writing some short puts under the market overall. No swing trade longs for me from now. I do have some AMD though as part of a long-term position that I'll be looking to hold at least over the next 2-3 years as they expand their data center offerings. Moving on to Amazon right now. Amazon 0.74%, but Amazon as well has been a little bit slow, right? Several companies are establishing beautiful daily uptrends. Amazon still has not. We're still looking for the breakout of 208.60. If you do get that breakout and the daily uptrend follow through, you are going to cascade into resistance above, which is 217 up to 227. So Amazon has been somewhat slow as of recently. Weekly consolidation, higher lows being set, looking for that expansion. Now, in the event Amazon pulls back, this is when I want to go shopping, guys. I'll be looking to constantly sell puts in the mid to high 190 range. Would love to pick up some Amazon there. And if not, I guess I'll just hold my leap calls that I have and my long-term portfolio shares. Still one of my favorite companies in the entire market to invest in, at least for the next 2-3 years. Moving on to Google right now. Google also not looking too bad. We know what they were trying to do, right? Daily downtrend into a back test of support. It's a very decent support range. Prior resistance all the way back here, prior support all the way back here. So it is a very solid range that the bulls are now trying to play off of, right? So looking at this, clear pattern right now, looking for some weekly higher lows, possibly for some weekly trend expansion. Google has been lagging several of its sector peers and just the overall tech index as a whole. The valuation still remains extremely cheap, and I still do believe that this is a company that presents some tremendous risk to reward. So positioning could be very clear here. Stop loss below 163, and then you're just looking for expansion into the previous highs of 178, and then take profit number 2 would be kind of these guys up here in the mid 180s. Decent risk to reward on a swing trade, and for a long-term portfolio position, I also think the risk reward is pretty good. Moving on to Meta right now. Meta starting to really fly right now, 3.16% to the upside. Very happy I was able to accumulate some more Meta shares for the long-term portfolios in that lower location down there. But even right now at 687, it's not a very bad proposition. It's trading in the mid-20s for a forward price to earnings, but the PEG ratio is closer to 2. Free cash flow yield is okay. So it's not the cheapest Meta has ever traded, but it's also not objectively that expensive. The company has fantastic net margins. The bulls are in full control of this daily uptrend swing right now. If we do choose to pull back at any point in time, looking for a higher low, anything above 632 should do it for a higher low, possibly for further trend continuation. And the clearest time frame of them all, in my humble opinion, is the weekly, right? Beautiful weekly uptrend, higher lows are now set, and going for that next weekly leg of expansion. The next target for Meta is indeed the all-time highs, 733, as there's not much in terms of resistance before then. Moving on to Microsoft right now. Microsoft up about 0.19%. Microsoft just grinding higher. Not moving higher fast, but every day just grinding higher, right? At the current stage, daily uptrend is maintained right now. The higher lows are still set right now at the lows of about 455. So we'll see how high Microsoft can actually get before we're having a decent size retracement. We're very close to the all-time highs right now. 468 is all-time highs on Microsoft. And if ever you guys see them lose this pattern and consolidate, you should understand what the bulls are trying to look for here. They're just going to be looking to take a quick breather, looking to set some higher lows and possibly go for the upside trend continuation. The valuation of the company right now is a little bit on the expensive side. I was saying how good of a deal Microsoft was in this lower area. Hopefully you guys were able to pick up some shares for the long-term portfolios, but here is not a position in which I'd be looking to buy any shares for the long-term overall. It is somewhat expensive in terms of historical norms. Moving on to Netflix right now. Netflix, another almost 2% day to the upside. This one just does not slow down. It's kind of like Microsoft, but it moves a little bit faster, right? That being said, daily uptrend is now clear as day, looking for another leg higher. Anything at this point above 1175 would be looking for a higher low, possibly for some further trend continuation. Next areas, guys, at the blue sky breakout, go with psychological levels, right? 1250, 1300, etc. That being said, the weekly time frame is very extended from the 12 EMA. The monthly time frame is very extended from the 12 EMA, not a company in which I would like to position either for a swing trade long, nor more add to my long-term portfolio shares. I did add to my long-term portfolio shares in this whole region down there. Excuse me, that circle was a little bit too wide. In this whole region down there. But right now, it's a little bit rich for me, trading at $1,200 or more. It's about almost a 50 forward price to earnings for the end of 2025, and the PEG ratio is now over 2. That's when I usually tend to hit the brakes. Even though it is a phenomenal company, I have a lot of shares, and I wouldn't be selling any shares, but starting a new position up here, maybe not the best risk to reward proposition, right? Moving on to NVIDIA right now. NVIDIA was up 0.5% on the day. Not a bad showing from NVIDIA, but not truly getting the lift that some people would have hoped. You know, some people remember the NVIDIA from back in the day where NVIDIA used to have line up 3, 4, 5% consecutive days in a row. It had some of those back there, but for the most part, it's been fairly muted in terms of what people remember it for, right? That being said, beautiful new daily uptrend right now. Back tested of support recently, 135 down to 126 is that region, and we're just looking for NVIDIA to kind of expand. Where are they looking to expand into? Your all-time high range of resistance, right? Roughly 145 up to 150 could be a bit challenging for the bulls, as it has been every single time in the past that it's tested those levels. That being said, in around 140, NVIDIA is not a bad proposition, trading at a forward 2025 price to earnings of 32, and at 140, it's a 1.4 peg. You're not really paying all that much for that growth overall on NVIDIA. I still do like it. It is by far the data center market leader, and they have such a phenomenal product line in terms of not only hardware, but also their software services and their ecosystem, which not many people talk about, but that, in my opinion, is more so than not NVIDIA's competitive advantage. So looking pretty good there for the expansion. The clearest time frame is still the weekly time frame right now, looking for some very nice expansion. The MACD is still positive, and we are nowhere near overbought conditions on this weekly. On the daily, you are oscillating at overbought conditions, but it's NVIDIA, right? It'll probably be also beholden to Broadcom earnings tomorrow after the bell. We'll see if Broadcom earnings is enough to pull up the whole sector a little bit more and send NVIDIA testing into its all-time highs. On to Tesla right now. Tesla was actually down 3.55% today, and unfortunately, they have now almost given all of this move back, right? This right here is, technically speaking, a daily downtrend, right? You have the high, you have the low, you have the lower high, and you have the lower low established. We have not lost the 330 range, almost, but not quite. If you do get some consolidation, follow through on this one. More daily downtrend just means on the weekly time frames. What are you looking for here, guys? You're looking for just a weekly higher low, yeah? Very normal for Tesla to consolidate. Where could we possibly coming down into? Well, talk about the whole lower 300 down to about 260 range. I'm not saying it's going down there. I'm just saying that's how wide the range of support is, right? You can see it clearly. In the past, it's been acting as some resistance for the bulls. If we back test it right now, it will be acting as support. So in the event Tesla is weaker than the rest of the market, that is where I think we would consolidate into. No swing trades for me on Tesla right now, but just noticing the breaking down of the pattern. If you break this range and you had some longs established from here, that would unfortunately be the stop loss for the short-term trades, as it invalidates the upside momentum. Moving on to Palantir now. Palantir also down 2.37. At one point today, Palantir was down over 5%, but the bulls were able to play some very nice defense throughout the rest of the day. But you can see the opening candles were not very kind to Palantir overall. However, the bulls still maintain full control right now. It is a daily uptrend. We are looking for a higher low, which might have been established today, but at this rate, Anything above 121 is just looking for those higher lows, maybe for a bit of a back test before a bit of a run. I don't know, but Palantir is looking like a very decent chart setup right now. No major red flags for the bulls, and I'll remind you who's in control of the longer time frames here. It is, of course, the bulls again looking for that weekly leg of expansion, but we can see it's been challenging for Palantir to really break out of this previously established all-time high range. Talking about 130 to 120, valuation has always been somewhat of a concern for Palantir, of course, so not my favorite stock to buy right now in terms of risk to reward for the long-term future. I still think Palantir has a very bright future ahead of it, but it's priced in a lot of growth for the next few years so far, so might be looking for any dips, right? Any consolidation dips on Palantir could be ones that we might be more in tune for buying, but chasing it right now in or around the all-time highs, I don't believe it has the best risk to reward overall, despite me loving the stock. That is me saying that, right? Now, before last, moving into SOFI. SOFI down about 1.46% overall. Not the worst day for SOFI, but still doing absolutely nothing, right? Daily uptrend, but the movements have been very slow. Looking for higher lows and possible continuation at this current stage. Continuation could bring us into the 16 to 14 range of resistance. It was all of these guys from back there, so the bulls do have a lot of work to do. The clearest time frame, in my opinion, is the weekly, in which we are only seeing sideways consolidation, right? It's been a very wide bull flag, in my humble opinion. The bulls are looking to build some accumulation and maybe go for the test of that resistance range. However, if we maintain flat or even slightly down, I will gladly write some short puts under the market right there. And for some long-term portfolios, guys, in around the 13.5 range, the valuation is quite fair and does support the expansion of the market cap. The company is only worth about $14-15 billion right now. I can clearly see this becoming a $25 to $30 billion company over the next 2, 3, 4 years overall. So there might still be a 2x left in SOFI, maybe a bit more, as the digital banking trend is obviously front and center for most of everyone right now. Lastly, moving into Uber. So Uber having a nice little bounce today, 1.1%, but they were up a little bit more, closer to 2, and they kind of gave it all back, right? That being said, a daily downtrend is clearly in motion. You guys know the drill, right? If you want the bulls to get this back, give me a nice size bounce and then reset the price action, and that is when you'll know that your weekly consolidation leg is finished. As of right now, the bears maintain control of the short-term time frames. It is not a weekly downtrend. This is only a weekly retracement. Weekly higher lows are set down here at about 71.50. Healthy retracement in my humble opinion. Right, and the next area of support is down here, 80 to around 78. Still a great company right now in the mid-80s range. The valuation is not too bad, and I still do believe Uber's network will do a lot of the heavy lifting for them over the next 2, 3, 4 years as they integrate with autonomous vehicles, right? It may not be Uber versus autonomous vehicles. Autonomous vehicles will probably be integrated into Uber's network overall, as those network effects are obviously what several players such as Waymo want to be into to have a very large customer base. So there might be some synergy rather than competition. Moving on to TSM right now. TSM up 2.42%. We were watching this one as one of the ones that was kind of trailing, right? AVGO was breaking out, NVIDIA was breaking out after earnings, and TSM was kind of just hovering right there above the support range, which currently stood at about 193 down to 183. I was saying this one looks very good for a swing trade long, and the longs are now playing out perfectly into resistance, 205 up to 210. That would be close to the all-time high range for TSM, and TSM right now at the at 200, it would be about 10% higher than here. You're roughly looking at a 22 forward price to earnings, which is really not bad. A very low PEG ratio and a decent free cash flow yield. Very strong net margins overall. Still one of my favorite companies in semiconductors. It is in my long-term portfolio. And another very clear time frame here, guys, is just looking for the continuation of this very beautiful weekly leg of expansion. We'll see if the bulls get tired when they hit this resistance range. But as we know, any move lower, guys, looking for a higher low at this point. Anything right now above 190, just looking for a higher low. And maybe we need to two-step this process into resistance. And that is everything for your overall big tech rundown. Now let's dive into some of the biggest gainers and losers of the week and see if we can find any plays there. So if you pull up the options list right here, let us take a look at the biggest losers of the day first. So Dollar Tree. Dollar Tree still struggling with the sale of their Family Dollar business, incurring some costs right there. The dollar stores are interesting, guys. We saw Dollar General really pop off over the course of the last few weeks, looking for the weekly uptrend, but we know these have been extremely crushed in the past few years, as the pivot from consumers towards dollar stores hasn't happened the same as it has in other times of economic consolidation, right? That being said, there could could be a little bit of a swing trade here on a back test of the lower levels. 80 down to roughly 77 could be a nice little area to position in if you can find it, right? Going for the longer term appreciation of these companies. I'm not in them myself, but if somebody's looking for them, that would be the level that I'd be looking for, right? Low 80s down to high 70s seems to be decent. CrowdStrike we covered yesterday after the earnings. Clear to see what CrowdStrike is trying to do, right? There is one little area here that the bulls are trying to backtest. Let me just put a little rectangle here for you guys, right? They're trying to backtest these guys as support right now. We'll see if it actually holds up. 451 to 433. I was saying yesterday that this company is fairly expensive. Even if you were to forecast out to 2030, the company remains a little bit expensive. It is probably one of my favorite companies in cybersecurity, but that's not the point, right? You always have to be mindful of what you pay for something. So no swing trades for me right now. If someone was looking for some swing trades, you could make some sort of an argument here that on the weekly time frames, you could put a stop loss below here and then go for some expansion, possibly towards 500, but it's kind of equidistant risk to reward, right? Moving on further, Tesla we already covered. Qualys is a company that we don't often cover, but it is one of the most read ones on this list right here. I mean, Qualys, I like this one down below here into the lower 120s, and I still do maintain that is really where I like the company and prefer it best in terms of the valuation and just in terms of the technical setup. I think there's better companies in the market right now, but that's just how I see it, and that's the level that I'd be looking to play off of. Give me a nice little red stint down there, and I might be looking to play some short puts below the market, but it's not one that we look at that often overall. And now lastly, we can cover a little bit of MSTR, and that'll be the last one on the red side. MSTR, guys, is trying to reverse the time frames right now, right? We have a nice daily downturn right there. The bulls are trying to reverse this, go for expansion. The clearest time frame in my opinion is the weekly. It's a beautiful weekly uptrend, looking for a higher low, kind of like Bitcoin right now, trying to go for that expansion. Obviously, MSTR is not going to lift off without Bitcoin, but it's not looking too bad in terms of the pattern. If you guys wanted to play this one or BITX for playing Bitcoin with a bit of leverage, it is not looking too bad. If you wanted to play swing trades with a tight stop, the stop would have to be below 360, and then you'd be targeting expansion above the 431 range. Decent risk to reward for a short-term trade on MSTR, in my humble opinion, as it backtests this level, similar to how the Bitcoin is backtesting, the whole 105 to 100 range. Now, moving into some other names here. Oh, you know what? Let me actually cover HIMS, because HIMS has been having some violent swings in the last few days, right? Yesterday it was up 20% before finishing red. Today it was up 5% before finishing red once again. Now this is a lot of things happening at the same time, right? Retail interest is very high on this stock right now overall, and it has run an absolute ton. This is somewhat of a short squeeze at the same time, but also somewhat of the company expanding into its fundamentals. I still do believe that HIMS probably has no problem becoming a $20 to $25 billion company, but it probably won't do it right away, right? We're talking a next plan for maybe the next 1 to 2 years overall. That being said, momentum has been very hot recently, and we are still just looking for a bit of weekly consolidation. No trades for me, but if ever HIMS breaks back down into the high to mid 40s, I'd probably be looking to sell some puts down here around 40 bucks. I wouldn't mind picking up some shares there. I'm not saying it's going to go there, but that's the benefit of selling puts, right? It's if it does come down there, I won't mind buying some shares, and if it does not, I'll just get to collect some very juicy premium. You guys know that I bought a couple shares all the way down there, so I'm currently up almost 2x on this stock, and I'll just be holding what I have, not adding any more up here overall. But that is the price action on HIMS. It's been very volatile. Now, if you take a look at some of the biggest winners of the day overall, well, of course, we have to talk about CoreWeave. CoreWeave going up another 5,000% today after going up 5,000% yesterday. Just kidding, guys. Of course, CoreWeave has been doing phenomenally, but one tends to question the longevity of the business model, right? They're still not a profitable company, and it's a company that kind of just rents out GPU processing power. They used to do this for Bitcoin mining, but now that that's no longer a thing, they're using it to rent out for AI processing services, right? However, this company has some heavy costs in the future. Number one being the fact that it will eventually have to repurpose all its older GPUs into brand new GPUs. That's going to come at a heavy cost, and so far the company is not profitable, and the path to profitability remains somewhat unclear. That being said, they have a tremendous amount of contracts for the next few years, and currently into 2028, you can see the revenue is going to be about $20 billion. So even right now, guys, at $78 billion, it's only trading 4 times 2028 sales. I know that's a long time away, but just for you guys to understand, the valuation does make sense if you make a few assumptions here. Number one, that their refresh cost of their GPUs is not going to take away that much from their profitability. And number two is them actually being able to scale into profitability in the future. This is just a classic post-IPO run. It's being tied into the semiconductor trade, the AI trade. It's a combination of anything. Very, very tough for me to touch it up here. However, the options chain has some very nice volatility. Any rapid declines and healthy pullbacks in the stock, you can get some phenomenal premiums going way under the stock price in around the lower $100 range for selling some puts, as the IV chain is currently sitting at like 100-120% IV. So really interesting to play this one far away from the market. But any longs right now, I have my reservations, right? You're a little bit late, let's be honest. Moving on to Reddit right now. Reddit could be one. It used to be part of that whole growth crew, right? Anytime AppLovin would run, any other times other names would run, like some of the high-flying growth names, right? AppLovin, companies like Axon overall, stuff like that, right? Reddit used to be bunched up with these guys, but has been lagging. I don't really mind this one. The valuation in around the mid-teen, one-teens is not terrible when measuring across a forward PEG ratio overall. The revenue and EPS growth rate is very good. And of course, they have a very solid user base overall. It's just been lagging behind the market. There is a swing trade that you can take here in terms of trying to go for some of that expansion, right? There's a clear stop loss level down below here, below about the $95 range, and the expansion target for a longer duration swing would be all the way in here, right? The whole 160 range. So there is a longer duration swing trade overall, and the monthlies would support that too, right? You're looking for a monthly higher low, maybe for some expansion of this trade. It's been left behind. It's still one of the growth stocks that I do like. I wouldn't be putting a ridiculous amount of money into it, but there is an argument to be made here for some swing trade longs on Uber overall. Next, we have onsemi. onsemi has been one that's just been battered down. Industrial weakness, automobile weakness, phone refresh cycle weakness as well. However, the CEO came out just the other day saying that they were saying that the demand back in the industrial and auto markets was coming back for their products overall. So that's why we've had a tremendous rally here, 20% on the week for ON Semiconductor, establishing a beautiful new weekly uptrend. However, we are coming into resistance, right? 55 down to 50. You might remember that back here, I used to play this one on the wheel a lot. And I'll be looking to play it a bit in the near term future because of the fact here, guys, that now we actually have some formal guidance that several of their lagging sectors turning the corner of cyclicality was one we were looking for, right? They're finally starting to guide that is finally happening right now. Revenue and EPS growth is very nice at, $50 right now. The valuation is not that commanding. It's probably like a 17 forward price to earnings. And in terms of the PEG ratio, it's still probably under 1, probably around 0.5 overall. Any pullbacks on ON, we might be looking to play the wheel strategy on this one again, and maybe even positioning for some swing trade longs. It's been left behind as part of the semi trade, and it could be an interesting bet moving forward. Then we have to talk about two more, and then we're done. Talking about AppLovin over here. So AppLovin, phenomenal rally from the bottom on AppLovin. Clear weekly uptrend right now. Not one for me to chase in the markets right now. The best entry would have been roughly around there. Unfortunately, we missed it. I didn't bring it up on the channel, but it is what it is, right? If you guys are just looking for my impressions on a stock, you're probably chasing up here. If you have some long-term shares that you accumulated during the dip, I don't see any reason to sell, but starting a position right here, guys, probably not the best risk to reward. I'm not saying it's not going to go up, but I'm all about risk to reward, right? Being very cautious on what I pay for something. At 350, it was a good deal, but right now, guys, it's starting to pull into the higher end of its valuation overall, but a phenomenal company. And lastly, we have Spotify, whose earnings we covered April 29th. I'll remind you guys, when we did them, it was about 10% lower at about 640. Forward price to earnings at that point was about a 65. The PEG ratio was about a 1.37. which was good. And the trailing 12-month free cash flow yield was not that bad. The better metric, though, because EPS is kind of all over the place for this company sometimes, price to sales. Price to sales right now, 10% higher than here. They're trading about a 7, which is normal for a rapidly growing tech company overall. So I'm not opposed, guys, to, buying some Spotify shares up here. You're not getting the best deal after earnings. It was not a bad deal. Up here, it's not the best deal at all. If you're holding some Spotify shares from years prior, I see no reason to sell. The company is still doing fantastic. If I were looking for any swing trades currently, at this point, they back tested the level that we were looking for, 640 down down to 614. This was the level. I haven't really mentioned it since earnings. I don't have any swing trades myself. I took some swing trades after earnings, and I closed them when we reclipped into the all-time highs. So I made some money there, but no swing trades since. If I were looking for new swing trade levels, looking for a bit of a retracement down here into the prior highs, 663, then it's easy to put a stop loss below there, and then you target upside profit targets psychological 700, 750, and over and above for any swing trades. And that's pretty much everything that I wanted to cover for you guys today. So hopefully you guys enjoyed today's video. We covered a lot of charts, a lot of different ideas. Hopefully it did give you some insights and some ideas into some things that you might be looking for. That being said, that's all I had, right? If you enjoyed this video, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these pretty much every Monday to Friday after the close. And as usual, if you guys have any questions at all, always feel free to leave them down below in the comment section. Always love answering your guys' questions on stocks, options, long-term portfolios, macro, and everything in between. And lastly, if you guys wanted to participate in a group of traders and investors such as yourself, over 150 different members, guys, all trading the same strategies, all building long-term portfolios for wealth creation for the short, medium, and long term, you may consider joining our community. In that community, you get access to all of my trades, all the various trading strategies that I run, whether it's the wheel strategy, selling credit under the markets, the directional plays, the call debit spreads, the share swing trades, the leap call options as well, and all the various trade ideas that I present on the channel, but that I do take in real time in my portfolios. The link is down below in the video description. You get access to all of the various swing trades. In the Discord, you get access to our private morning live streams every morning where I trade live and also answer all your questions on your stocks, your options, your long-term portfolios. And if you're not there, they're always recorded so you can watch after. You can ask me all your questions in our chat rooms all throughout the day. Anything you want, guys, and I give very full and very long answers all the time, trying to help you guys out to the best of my abilities. You get access to the private videos in which I share videos on fundamental analysis, technical analysis, how to, various trading strategies that I don't talk about so much on YouTube. Tremendous value there in the private member videos. And lastly, of course, you get access to all my charts and all my watch lists, whereby you just copy paste 2 clicks of a button and they're all yours. You get all my watch lists, you get all my technical analysis when I do them, support resistance boxes, and of course, anytime you see any fundamentals on the charts on almost like 200 plus stocks right now, those come in there as well. So you just copy paste and get everything, just an added bonus. If any of that interests you, the link is always down below in the video description. Hopefully I see you in there soon. And if not, guys, I guess I'll see you right back here on the channel. That's it for me. Take care. Have a great Thursday tomorrow. Pay special attention to those AVGO earnings, and I'll recap everything for you guys tomorrow evening. So take care and peace.